Today is the 24th of January 2022. My name is David Hickson, and in today's market update I'm going to be taking a look at the S&P 500 and also Bitcoin and gold. We've had many requests to update the analysis on gold, and so I'm going to be doing that. Before we take a look at the markets, I must ask you to please make sure that you have read and understood these disclaimers. In the interests of trying to keep these videos as short as possible, I am going to get straight to the point with each one of these instruments. In my previous update for the S&P 500, and here we are looking at data from Yahoo Finance, and so the data differs ever so slightly from some of the data that I have been looking at in previous market updates, but it is the same instrument. And in the previous market update, I mentioned the fact that we were beginning to see some bearish cycle shapes. If you haven't seen that market update, I would encourage you to go and take a look at it, because as you can see, the bearish cycle shapes turned out to be a precursor to a big bearish move, with price coming all the way down to this level on Friday, and this is the beginning of the price action today. I'm recording this video about an hour after the markets opened in the US. And so the bearish cycle shapes were indeed a very useful warning about the fact that the market was turning bearish. So what is actually happening to this instrument? As you can see, I have positioned the 40-day cycle trough over here on the 10th of January for this position over there, and so in that way you can see that we are now approaching, of course, our 20-week cycle trough, which is due over here. So this is the nest of lows for the 20-week cycle trough. And so we are in the second 80-day cycle of the current 18-month cycle. This analysis is making the assumption that the 18-month cycle trough formed over here at the beginning of October. And again, please take a look at previous market updates where I have discussed that at some length. And this analysis continues to work really well. And so we have so far seen one 80-day cycle, which in very simple terms gave us a move up like that. There's our bullish M shape for that 80-day cycle, and our next 80-day cycle is indeed turning bearish. So that is what we expect. There's no big surprise that it's turning bearish. It is turning more bearish than we might have expected, but at least thanks to a cycle analysis, we were on the right side of the market in terms of expecting the price to move down into this 20-week cycle trough. And of course, this October low is going to provide us with some form of support. There's definitely going to be a support level. Being an 18-month cycle trough, you will probably find some support at that level. It's a little early, in my opinion, for the 20-week cycle trough to form, and so we still have some time ahead of us. As you can see, there have been 112 bars, or 112 days, because this is a daily chart, since the 18-month cycle trough at the beginning of October. The average length of a 20-week cycle is 136 days. And so we are still looking at about 24 days ahead of us. There have been 52 days since the 80-day cycle trough, which almost certainly formed at the beginning of December. And again, there are 68 days in an average 80-day cycle. And so we're looking at about 16 days there. So we still have 2 or 3 weeks ahead of us for this move down, which is a little bit worrying. Why is it possible that so soon after an 18-month cycle trough the market is turning bearish? Well, let's go and take a look at another analysis and step back a little bit to answer that question. So here is a longer term view, and we're looking at a slightly different analysis. The difference only comes in when we are going to zoom in a moment, and so I will explain that in a moment. Of course, we experienced a very big cycle trough in March of 2020. In my opinion, that was a cycle trough of at least 54-month magnitude. This particular analysis shows it as being 9 years in magnitude. Don't take that too seriously. Those very long-term cycle troughs, of course, they are important, but I don't worry too much about them in terms of the analyses I'm presenting in these market updates. The important thing is that it was a big magnitude trough of at least 54-month magnitude, in my opinion. And so we have effectively seen a very bullish 18-month cycle for the first 18 months following this trough in March of 2020. The next 18-month cycle is expected to be less bullish. Now, that sounds a little vague, but I'm being quite specific about it. What happens is that, of course, we have a progression of cycle shapes which will elapse over the current 54-month cycle, and the first 18-month cycle is expected to be very bullish. The next one is expected to be less bullish. It could turn bearish. That is quite possible depending on what is happening with the longer cycles. And so you can see we had a fairly good progression over here, but now we have experienced the fact that this market is definitely beginning to look a little bearish. So what we're looking at for the S&P 500 is for price to come down into the 20-week cycle trough. I would like to point something out here. I mentioned that the difference with this analysis was in the finer details, and it has to do with the 40-day cycle trough, which you will remember I had pinned. In other words, I had influenced the software to position that 40-day cycle trough under this low price point over here. But in this analysis, it is still being shown as a nest of lows. And the reason for that is because Sentient Trader software is a little surprised to see the market turning quite so bearish all of a sudden following the 40-day cycle trough, and so it hasn't actually positioned it yet. But in my opinion, as I discussed in the previous market update video, I think that is a good position for the 40-day cycle. Let's quickly go back to the other analysis where I have actually positioned that 40-day cycle trough there. And let's discuss an interesting email that we received from a Sentient Trader user discussing the possibility that the 40-day cycle trough, instead of occurring here, or indeed still lying ahead of us, in fact occurred over here. And that provides us with a much nicer sequence, if you like, of interactions between the price and the FLD, the 20-day FLD. I'm sure that you are familiar with the sequence by now. If you aren't, please take a look at the description below this video where I discuss the FLD trading strategy. We track a sequence of interactions between price and the FLD. That is an A category interaction where price crosses above the FLD. Here is the B category interaction where price is expected to find support at the level of the FLD. As mentioned in my previous market update video, the fact that price dropped down below the FLD was a bit of a worrying sign. It was an early indication of some bearishness coming into this market. The C category interaction then is when price crossed back up above the FLD. Now, if we position the 40-day cycle trough under that price low point over there, then the D category interaction would have been a matter of price just moving towards the FLD and failing to get above it. The E category interaction was this little blip upwards, and then this would have been the F category interaction, and then a G category interaction as price came up and found resistance at the level of the FLD, which means that we are now in an H category interaction. That is completely possible. It is a viable interpretation. However, the fact that we still have a good 16 to 24 days to go before the nest of lows for the 20-week cycle trough would indicate to me that it might be premature to position the 40-day cycle trough in that position, which means that we have a slightly different sequence of interactions. We have the A and the B and C, exactly as described a moment ago. This cross down below the FLD is the D category interaction. Price came down, easily achieved the target, kept moving downwards. We would then have expected an E category interaction, which is what follows a 40-day cycle trough. But interestingly, you can see what happened here. Price came up to the FLD, failed to even touch it, didn't quite reach it, which is a significant failure of the market. It's a bearish failure. It's a very bearish sign. And so when we saw that happening, when we were expecting an E category interaction where price should cross above the FLD and achieve its target to the upside, that was a very strong and early warning sign that the markets were turning bearish. And so I would still label that as an E category interaction, although it's a very unusual E category interaction because it does not involve a price cross. The F category interaction in this case is a matter of price simply moving down away from the FLD. You must remember that in terms of the definition of an interaction between price and the FLD, it does not always have to be a matter of price crossing the FLD or even a matter of price touching the FLD. It is simply a matter of the relationship between price and the FLD, and at particular moments in the progression of the various cycles as they play out and influence the markets. We expect to see these interactions, and sometimes when markets turn particularly bullish or particularly bearish, the interactions are distorted. And in this case, I think there's a strong case for the fact that the E category interaction, where price should have been expected to cross the FLD, failed to get over the FLD and is simply a matter of price moving towards that FLD. This was the F category interaction. The reason why I'm spending some time on this is because we need to be careful when price does come up to the FLD again, that we don't expect it to cross there, because I think there is the danger that price is going to come up and find resistance at the level of the FLD before moving down again. That's only a danger. It is, of course, possible that price is going to form this 20-week cycle trough and then bounce up and cross above the FLD, but we need to be on our toes and watching out for it. You have to be very careful of trying to prematurely pick the trough. You don't want to be entering long trades until we have some evidence that a trough has formed. It's a little bit like stepping in front of a moving train. When the markets are moving down towards the trough, we need to stay clear in terms of entering long trades until we have some good, clear evidence that a trough has formed. Let's take a look now at Bitcoin. Again, in the interests of keeping this video as short as possible, I would encourage you to take a look at the previous market update in which I discussed Bitcoin, and I discussed the possibility that the 20-week cycle trough had formed there and that the bearish cycle shapes that we were looking at almost 2 weeks ago now when I made that video was this particular bearish cycle shape over here, which gave us advance warning of the fact that the markets were turning bearish. I also discussed the magnitude of this peak over here, which I am increasingly convinced was of 54-month magnitude. Following a 54-month magnitude peak, you of course expect markets to go down again and move down fairly swiftly. So what is happening here, as mentioned in the previous market update video, I am thinking that Bitcoin is now being more influenced, or more accurately analyzed, on the basis of a peak analysis as opposed to a trough analysis, following a very important major cycle peak. Trying to analyze the troughs can be difficult because of the bearish pressure caused by the potential peak that has formed over here, which is of course pushing the markets down, or pushing the value of Bitcoin down, the price of Bitcoin against the US dollar. So what is happening here? Well, as you can see, according to this analysis, we're expecting a 40-day cycle trough. There is the nest of lows. Again, I think that is a very viable position for the 40-day cycle trough over there, which means that if the 40-day cycle trough has happened, then the next trough we're looking at is an 80-day cycle trough, and the next sort of big trough that we're looking for is a 40-week cycle trough. But the trough analysis has become very messy. In my opinion, we need to focus much more on the peak analysis. And so let's do that and discuss what is happening with the peaks. Here is a nest of highs. Well, that's actually the circle and whiskers for the 80-day cycle peak, indicating that this might have been a cycle peak. Here is the nest of highs, and so the 80-day cycle could possibly have formed with this very minor little move upwards, forming an 80-day cycle peak. If we count the number of bars following that 54-month or potentially 54-month cycle peak, you can see that at 68 days, that would position us over here exactly a week ago on the 17th of January. And so that is when, according to the average length of the 80-day cycle, we would have expected the peak to form. And so it is possible that that 80-day cycle peak has indeed already formed. And so if we zoom in here for a moment and focus on the peaks, one way of doing that is to display the composite model line based, as discussed in my previous market update, only on the peak analysis. You can see I am not including the trough analysis in this composite model line, and that is because I think that the peak analysis includes the more accurate information, or at least it more accurately describes the price action that we have seen happening recently. You can see this composite model line is indicating some trough to form fairly soon, and then of course price is going to move up into this 20-week cycle nest of highs over here. So that is going to give us the next bullish move in terms of Bitcoin price, but of course the cycle trough has to form first. Is there a slightly more optimistic or slightly more bullish outlook for Bitcoin? Yes, there is. There is a slightly different trough analysis that I would like to show you. And that is this analysis, which assumes that the 18-month cycle trough actually occurred earlier in the middle of May. You can see that's not a very good position for a cycle trough. A much more likely position is this position in the middle of July, which is where the other analysis had that 18-month cycle trough. But the interesting thing about this analysis is it provides us with a very good 20-week cycle trough over here in the middle of September, as you can see, and it provides us with a slightly more optimistic outlook over the next few weeks and month or two, in that price is now moving down into the 40-week cycle trough. Of course, having formed a 40-week cycle trough, it is expected to bounce, and it will bounce again up into the same 20-week cycle peak that we see over there. So let's quickly take a look at the composite model line for this particular analysis, which in fact presents us with a very similar picture to the other analysis. And again, I can show you we're only including peaks and not the trough analysis. If I include the trough analysis, then it gets only slightly distorted, as you can see, but for consistency, let's only consider the peak analysis. And here you can see that, of course, we're expecting a trough to form fairly soon. There is that bullish move that I mentioned. The difference with this is that having formed the 20-week cycle peak over here in about the middle of March, price will come down again, but we have a generally more bullish outlook according to this analysis. The interesting thing about this analysis is that we have a very good interaction with the 20-week cycle FLD. And so let's display that 20-week cycle FLD. Here it is. In fact, this was mentioned in a comment on our last market update video. Here is the A category interaction following the 18-month cycle trough. And it projected upwards to a target that was easily reached and met. And here is a matter of price finding support at the level of the FLD at the same time that the 20-week cycle formed a trough. And so that would be our B category interaction over there as it found support, and the C category interaction as it moved away from it. This is our D category interaction, a price cross down below the FLD. And the target for that price cross down was, I believe, a little higher. It was at about 35,000. So that target has been reached. So according to this trough analysis, the next thing we would expect to see would be price coming up and crossing above the 20-week FLD in an E category interaction. However, we really must bear in mind that at the moment the peak analysis seems to be the more accurate one, and so we will indeed get a move up. There's that composite model line showing us quite an interesting thing, which is that the composite model line is projecting that price will come up to the 20-week FLD and find resistance to the level of that FLD before moving down and eventually squeezing over it somewhere over there. So I think we need to focus on the peak analysis. Personally, for Bitcoin, we are going to watch with interest to see where it forms its trough. There is, of course, a very strong shelf of support at about the $30,000 level. So we're going to be watching that level very closely and then see what happens as it bounces up towards its 20-week cycle peak, which we are expecting probably to form sometime in March. Now let's take a look at gold. Here is a chart of gold, and it has been a couple of months since I last did an update for gold. I think the last one was on the 29th of November. One of the reasons I haven't been updating gold is because gold has been doing pretty much exactly what we discussed in the previous market update about gold. In particular, in that market update, and I'd encourage you to go back and take a look at it, I was speaking about gold moving down from the 20-week cycle peak over here and finding a 20-week cycle trough, which, as you can see, according to this analysis, it did. And in fact, let's just zoom in, because that it was quite an interesting formation of a trough. Gold is better analyzed in terms of peaks, as I've mentioned many times before, and so a trough analysis can tend to be a little bit messy in gold, but in fact I always keep an eye on it, because sometimes the trough analysis gives us some really interesting insight. So my previous market update was recorded on about this day over here, I believe, 29th of November, and at that point I was discussing the possibility that this might have been a 20-week cycle trough, and we displayed an FLD. It was the 20-day FLD, I believe. And I was speaking about the necessity of confirming that a trough has formed before jumping to the conclusion that it has. As it happened, this 20-week cycle trough did eventually form a couple of weeks later in the middle of December, and following the formation of the 20-week cycle trough, of course, price has been moving up. It's fairly clear where it's moving up towards. We have this 18-month cycle peak circle over here, and so we are expecting an 18-month cycle peak, and so it is moving towards that. In the interim, it is going to form an 80-day cycle peak, which is expected around about now. It's just possible that it has already formed that peak, but it's in the process of forming an 80-day cycle peak. And so nothing particularly unexpected really has happened in gold. But if we zoom back out again and take a closer look at what's happening here, we can see that there is the 80-day cycle peak, and here is the rather staggered nest of highs for the 18-month cycle peak, raising the possibility that the 18-month cycle formed a peak over here. But the important periods of time to look at are clearly around about now for an 80-day cycle peak, and then over here, of course, in another 68 days, when we are expecting the bigger peak, the 18-month cycle peak. Let's quickly display the composite model line here. The composite model line provides us with a very useful way of visualizing the implications of the analysis. It is entirely based upon the analysis, of course, and it shows us what the implications of that analysis are. And so you can see we have a peak forming now, which is this 80-day cycle peak. Then the price of gold is expected to drop into an 80-day cycle trough. We have a nice, neat nest of lows for the 80-day cycle trough in about the middle of February. And then we're looking for another push up into this final price peak, which will be the 18-month cycle peak. And we'll be updating the analysis as we get closer to that time to see how gold is progressing. I do hope that you found this market update useful and interesting. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.